We are here again. My name is Jonan Kandwanaho, the MD at Jonaki Holdings Limited, where we lend money. We give credits affordably and very, very swiftly. So here I am to talk to you about one of the topics. Of course, I've done a number of topics, but this is one of the topics that has been on my heart. And I think it will be very helpful to you as a business person. And I'm specifically targeting people who lend money because we want to clean up this industry. The topic is risk management in business, but more so it applies to money lending business. So many people say business is risky. Many people say, there's a lot of risks involved, especially in money lending. It is true that the businesses are risky, especially money lending, because you're dealing with money. So you have to be very, very careful. So I want to approach it this way. The risk falls in two categories or two angles. First is that you, the owner of the business, could be a risk to the business. But also, it could be that the clients are the risk to the business. So you, as the owner, you're a risk to the business because if you do not separate yourself from the business, then you're a risk to the business. Have you seen some guys who run businesses and he picks from the account, he picks from the counter if it's a shop, as and when they wish, to buy tomatoes at home, to buy spices at home, to buy clothes, as and when. You're a risk to the business. So you actually need someone to protect you from your business. And if that is not done, you yourself, before clients come in play, you yourself can actually cause the closure of your business. So what are you meant to do at an individual level as the owner of the business? You have to put a very strong wall. You can call it a firewall. The technology people use that a lot. You have to put a very strong wall between you and your business. So that whereas the business has its own account, you're also meant to have your personal individual account. Because that's a starting point to separate yourself from the business. And to manage your own risk as an individual, not transpose them to the business and then making it risky. So usually, much of the time, it's not the business that is risky or the investment that is risky, but it is you, the owner. And much of the time, you have to protect yourself from the business. Of course, there are a number of times, especially in money lending. I'll share my story. The time we had just started and we had not learned some of the things which I got to learn from my mentor and a few guys that I interacted with, is that, I would look at a car and I feel like, this car is beautiful. I actually pick company money, go buy that car. Or even sometimes it could be the client. He says, I have this facility, but I think I'm struggling to pay. So I think I can dispose it off. Would you be interested? I bought land that would get idle, and then it was not earning anything to the company. I was using company money. So ideally, in a non-decent term, I was stealing from the business. I was stealing from the company. Why? Because it was not my money, it was business money. And look at it this way. Some of the monies then that we're operating with, we had borrowed it at a particular interest rate. So you can imagine we borrowed this money from somewhere. We are giving these guys the interest rate, a particular interest rate, of course, lower than the rate we are lending at. But also realize that I bought land which was not in the plan of the company because we are not in the business of real estate. We are in the business of money. So ideally, we're meant to be liquid all the time. So here we are. The money is stuck in land, which we didn't have in plan, which we did not even trade in. And then here I am, I'm borrowing money at a particular rate. So who pays for that interest that I'm paying to? The person who gave me the money. So in nutshell, as a risk to the business, because time came and we ran short of money. So we had to borrow here, borrow there, not because we don't have the money, but we have money that is stuck in some assets which were not priority for the business. So it could be the case on your end. So you have to polish up. You have to polish up. I was lucky that I had a mentor who would push me at my back and say, please, organize yourself. Organize yourself. So you also need someone. And that's why I encourage people to sign up for my masterminds or any other mastermind for someone else who can actually help. A mentor or a coach, but someone who is actually doing what it is that you're doing, but is doing it very well. Because then you can actually learn from them. Because there are also people who have read and they think they know much and they can advise you at the theoretical point of view. But also you need a practical point of view. Someone who is actually doing what you're doing and is doing it better than you're doing it. Then you can actually learn from them. And that's when you can actually grow. And that's when you can reduce your personal risk to the business. I want to share the last aspect or the second aspect a second perspective of the risk. The other aspect is the clients being risky. Some of the clients being risky. So that still trickles down to the systems that you have in place, because if the client comes for money, how do you assess them? Because if the client is risky, you actually see that the client cannot pay. You have to go through steps to confirm that actually this person cannot afford. How do you confirm that? The assessment process. What process did you go through as a person who is lending? What process did you go through as a person, irrespective of the business you're dealing in? You need to assess the clients that you serve. There are clients that you know they cannot afford based on the assessment. So we base on data. We've had clients who will tell you, you know what, me, I work in Chiseka markets. Me, I work in, Chikubo. For us, we transact in cash. We deal in cash. So we don't use the banks, the mobile money, so I don't have the bank statement. And the person wants probably 100 million. And look, this person does not have anything to prove that they can afford to pay 100 million plus the interest thereof. So what do you do to such a client? Because that's a big risk. You're trading against the risk of giving the money and it does not come back, even when the client has a collateral. Because most of these guys actually have collaterals. The collaterals that are very, very sound. But you see, it is not the collateral that is going to pay back the money. It is the client. Unless your interest is the collateral, then you shouldn't lend that person. Because if you don't have the cash flows, which I'm interested in, because ultimately you have to be able to actually pay. So some of those clients will tell him, look, there's no way I can verify your handling of cash. I can only verify by your bank statement. And this is one of the things that I can highlight. The other thing that you can even look at is the CRB. Because we've seen, of course, we've been in this industry for quite a while, since 2011, quite a number of years. We've seen all colors of clients. A client comes to you, and this person actually is a multiple borrower. He has a loan in Centenary, he has a loan in Stanbic, he has a loan with the money lender, other monies from the SACCO. The guy is really highly indebted. But how do you come to know all this? You have to run a CRB from the Credit Reference Bureau. Because until you run a CRB, to get a CRB report, to know how indebted that person is, you're going to also get in the mix. And before you know it, you're in a mix of probably 5 lenders. And based on which lender puts on a lot of pressure, that's the lender that's going to get paid. But ideally, as a business person, you wouldn't want to take or swallow that risk. The earlier you assess that, the better for you. The other thing you can actually look at on the CRB report is that a person who has a bounce check. Because look, if I issue a check, I was very certain you didn't have money on the account, then that means I have an integrity issue. I have a character issue. I gave someone a check to go and bank that check and pick the money. Probably I owed them the money. But again, I was very sure I didn't have the money on the account. So what happens? The person banks the check and it bounces. So once you have a bounce check on your CRB report, that's a no-go zone because that person has a character and integrity issue. But look, if you don't assess all these things, how do you intend to progress in business? How do you intend to progress in lending? Because you've not done the assessment. And then when you wake up, you're like, but I think money lending is very risky. No, it is not risky. It is how you're doing it that is making it risky. Because if there are people that have lent money and they have progressed, if there are people that have lent to right clients, why do you think it is you alone who is losing out on the monies? Why do you think it is you alone who has over 70% of your portfolio in default? Why? Why do you think there should be a problem? That means you have to check your system, you have to check your process, you have to check how you do your things in your company. And that's when you can actually mitigate some of the risk. Of course, the strategies are very many because you could have a number of strategies, or I have a number of strategies that I can advise you to apply. But in this short time, I may not be able to apply or to share with you the strategies because there are quite a number. For example, if you're assessing the clients and you found out that they have a bounce check on their CRB, their statement is not good, and they want money that they cannot afford, actually the guarantor does not also have a statement, then how do you proceed? I would advise you put a system in place that can even tick, that even when I am not around, someone else can come in my shoes and run through the process, the procedures, and be able to serve that client. Because anything in business that is not documented cannot be applied consistently. Tomorrow, someone is going to ask for a CRB report, the following day, someone else will not ask. Why? Because you don't have anything written down to guide on on what they should follow. So anything that you think is important to bridge a gap, to sieve the business, to insulate the business from the fraudsters, you document it. That's one thing we've learned not long time ago. Because once I document it, then someone else that comes to serve the client on my behalf will know that, you know what, this has to be asked for before I can progress. And that's how we mitigate the risks associated with businesses, especially money lending as a business. But the last point I could also share with you is that some of these things do not come out of blue. We learn them. Because there are people who have done them and they have done them well. That explains why they are at another level. That explains why they are above you. So you need to actually humble yourself. Even if you're proud, humble yourself and get to learn from someone. See you. You can subscribe. You can like our YouTube channel. And I know always give feedback in case you have a topic that you want talked about. You can also highlight it in our YouTube channel. Thank you and have a blessed day. Blessings.